I find this stuff very fascinating, especially the ability to be able to take content, put it out there, and then be able to qualify that down, funnel it down to what is essentially a distilled lead. That's very difficult to do, and to be able to do so properly is a skill in itself.
Yeah, exactly. It's a skill itself, and if you're able to do that, then today's a digital world, Saad, altogether. So you can do more. You can do a lot with that particular skill set.
Oh yeah, for sure.
Yeah, that's how it is. I think Sukmani and SK has joined. Hey, hi Sukmani. Good morning. How are you?
Very good evening. I'm good.
Yeah. Would love to hear about you. See, this is a conversational web talk, Sukmani. We're gonna keep it very conversational, engaging. People are open to ask a question, unmute. They can put forward their views. It's all engaging and it's all value driven. So it's not like where we're gonna show across a big slide, look this number and that and this. It's
Yes, yes.
value driven. Yeah.
Actually, myself is Shukmani Kaudekar and trustee of Om Vijay Navjeevan Maharaj Charitable Trust. And soon we are going to start up an fundraising unit right now. So we are taking guidance for that. So we are elaborating many hospitals into our NGO so we can fulfill many more cases and many more successful cases to be done cracked from our NGO. So we are starting a small unit of fundraising unit. So we needed the proper guidance for that because it's our new startup for our NGO because many more projects and many more activities we are undertaking through our NGOs. Like we are doing an LGBTQ projects also by providing them ration kits and medical help and many more things. Second is main impact is on women empowerment, and we are running a project named Pad Bank. We are providing awareness of that thing to the rural area people because they don't have that much of awareness of these things regarding the pads and this sanitization and everything. So this is our project, and third project is under education, that is Saksham. So we are distributing books to the needy peoples and go to the schools and colleges and provide them the needy things like benches and many more things essential for the studies materials and all. So this is about our NGO working and myself.
Okay. You're based in which part of the US?
What exactly?
You're located where? Where you're from?
Mumbai.
Mumbai. Okay.
Yeah, I'm from Mumbai.
Okay, cool. Yes, I think, Sam, we'll just wait for a while. Probably people will keep joining. We can keep talking. I think that's Vishaka, who is this Tyler? Is auto recorder has joined.
Yeah, yeah.
Yeah, I'm surprised my fireflies didn't join either.
Yeah, that's true. That's true.
It goes everywhere I go. So
Yeah, yeah. Yeah, that happened. That's normal. Yeah. It's you doesn't need to take. So how do you look at this AI thing, particularly last 6 months, almost a year back, that has evolved, emerged, Saad, So right now, how do you look at that
oh,
particular thing?
I love it. I love everything to do with AI.
Okay.
Now, a lot of people get nervous at the idea, but the point is AI is just another piece of technology. It scares people today, but it was the same equivalent of the calculator 100, 70 years ago, right?
That's
Calculator also scared a lot of people.
okay.
And when the calculator came out, the people of the time actually used to start calling it the hand robot.
Mm-hmm.
And today we're talking about also, okay, well, the robots are going to take over. The same people are going to, back in the day, we're also saying, oh, the robots are about to take over. So
Yeah.
it's nothing new. I'm all for it.
Yeah, that's cool. That's cool, And I think, I'll definitely add on that, so when I look at the AI, what kind of a value addition they have added to our industry, trust me, it immensely helpful. It immensely helpful.
Oh,
And
yeah.
it is much more productive. The way you work. For efficient people, it is you have given them a armor. It's kind of a
Yes.
armor, it's act like a armor. So I see very positively on and on top of it, Saad, along with this particular industry of real estate investing, we work with the tech products too. So this like Nestive, you have a tech
Right.
platform, So we work with tech products a lot for promoting them, getting them users, So a lot of AI products we've been watching across, and we are helping them across for getting them user base kind of a thing. So that, yeah.
If you look at what AI is, right,
Mhm.
we're not at all yet at general AI. We're at the learning language models. And the
Mhm.
difference between general AI and learning language models is that generative AI and general AI is free thinking and it's able to formulate its own ideas.
Exactly. Mhm.
Whereas an AI, what currently is today, is essentially a very complicated decision tree. The way that we build bots, which is very simple, if this, that, if
Exactly.
this, then that.
Great.
AIs are just maybe 3 or 4 different degrees of if this and that, and then if that, then this. So it's
Exactly.
just a very complicated nodal system. Now, the only way that AI is actually really helpful today is if you can identify a process and you can then clarify what that process is, AI can then automate that process.
Exactly.
It's interesting in marketing because marketing is a process, right? Marketing is the idea of implementing a process. And so AI is perfect for marketing because it's this repetitive legwork that people have to do today, which can be automated using AI. You can't allow it. You can't really expect it to think for you. But if you can think for it and then set out a process for it, then as you said, it's like an army that can just do everything for you without you having to lift a finger.
Exactly. And you have added a very good point, Saad, that generative AI. Earlier, 1 year back, it was just a AI. Now it's a generative AI. So that condition you said, yes, no, if. Now with generative AI, you don't need to be a condition. It just, you ask what do you want, and it will hit all together, and it will give you that precise 90% answer correct. Now you have to be that much, what I can say is that much efficient, effective, that what you want to take out of it and go from there. So it's
Yeah,
that simplified. That simplified.
yeah, yeah. If you know what kind of output you want, then you can select from the list.
Exactly, exactly. And
I
make it,
spend
yeah, go ahead.
Well, no, I was going to say I spend a lot of time going through ChatGPT and I use ChatGPT a lot and also other AI sort of tools. And the first time you ask GPT something, it doesn't give you what you want. You have to spend a lot of time conditioning it and training it and putting it in the right frame so that it gives you the type of response that you expect,
Can I say
right?
something on that? Can I say something on that? See, it's very simplified. If I want something to be get it done from Saab, I have to make him understand what I want from him, right? Explain him what you want. The way I'm explaining you probably right now, you have to
Mm,
explain that chat GPT as well. The more
yeah,
better you explain, the better output you get it. It's as simplified as it is.
yeah.
So
It's worth taking a little time
yeah.
to do that in the beginning, to explain what industry you're focusing on, to explain what language and what tonality and those types of things that you want. But the other thing is, I spend, a lot of time talking to people who are using ChatGPT and they say, okay, well, the language is a certain way, or the response that I got, it wasn't a huge big deal.
So,
I think we've got a common.
we have a question from Wilson. Are we talking about marketing today? Yes, Wilson, we gonna talk about marketing today a lot more. We were just waiting people to join. So, Sat, why don't you take on Wilson questions and we get going from there? It's as simple as it is.
Yeah, sure. Yeah, nice to see you, Wilson, or meet you, Wilson. I think before you joined, Ramesh was explaining that we want to have a very interactive conversation. So feel free to unmute yourself if you want to ask a question. You can put it into the chat. We'll try to address them as we go. So we don't have a presentation or anything filled out. So we don't have an agenda to go through or anything like that. So if questions pop up, we'll address them immediately. Otherwise, we just plan to have a free-flowing conversation.
Sounds good.
Awesome. On that note, are there, any specific industries that people are hailing from? Because I think that that'll be useful for us to focus in those areas because, as you know, marketing changes by industry.
Sat, why don't we ask Wilson?
Private equity, real estate hedge funds.
Very cool.
So, Wilson run crypto hedge fund, basically.
Nice. Okay. Yeah.
I think
So
rest of all people get across from which industry they are probably, that would be really helpful. Yeah.
yeah. So
Yeah, this is
hedge
Raghu
funds.
from real estate, commercial real estate is what we do.
Nice. Good to see you, Raghu.
Yep.
So Ramesh, do you want to just get started?
Yeah, so I think, probably to talk about a Wilson question, we are talking about marketing today. Yes, absolutely. So I have a bit of cross question to, Wilson itself right now, that he is running a crypto hedge fund. Okay. And does his, there are two type of a different marketing, online marketing, offline marketing. Under again in online marketing, you have pull marketing, push marketing. Okay. So most effective marketing, we cannot cover everything today, obviously, it's a short time of a period, Wilson. So I will definitely go for an effective part, which is much more productive for everyone. That says pull marketing. Everyone interested, people who come by themselves and wanted to talk with you about your services, your investing, your opportunities. So that's the pull marketing is all together. And we would be more focused in coming word, to have that pull marketing kind of a thing, to user to come across and want to talk about your service. In that order, you really need to develop your brand. You really need to do a lot of content creation, which is actually relevant to your services, which is actually educating to your audience, that okay, these are the things how you actually need to deliver. So let's say, for example, you are into crowdfunding or you are into a crypto hedge fund. Basically, you're looking out an investor to invest along with you. So what value crypto hedge fund is creating, how you differentiate crypto hedge fund from there is historical investments are going on or traditional investments are going on or the new investment opportunity which is there. So how do you differentiate yourself? Obviously, you need to create a content, educate investors what crypto hedge fund look like, why you should invest, why it is better than other. So it's all about content and educating. So the moment you start creating a content, educating your audience at that particular point of a time, Wilson, precisely, if you start putting that educational content out there on social media, on on Google, on YouTube, people start taking that on it. They start consuming it, And the more you create a valuable content, most important thing, Wilson, most important thing is a valuable content. You cannot talk, broad. You cannot talk, hey, investing and investing. When you talk about crypto hedge fund, you really need to get into deep dive into that, what difference it create, talk to ABCD of that, and then it would create impact. So a value-driven content, a personalized content on that particular matter is the most important factor in order to have pulled, those investors to you. So 1000%, you have to go with educating your audience at a first level. Create awareness, create a brand awareness with educating your audience. Ultimately, you will start getting people into your funnel. If you will go, hey, come and invest with me, no one is gonna come and invest along with you. Talk reverse, how to invest, right, sir?
Yeah.
That's what
So
you do. Yeah.
yeah, no. So here, this is an important topic to me because um, Blake and Wilson, I think this will resonate with you. So my background, so right now I'm a tech founder. Um, I'm wearing the founder's hat right now. But at the same time, and before this all started, I have my own family office,
Mhm.
and we focus on private alternatives, right? So the real estate, the venture capital, infrastructure, private equity, private credit. We have a public markets desk, but I'm not really interested in the public stuff, so we've got an outsourced manager for that. But I particularly spent a lot of time um, with my analysts going through the deals that we have, structuring our family's capital into a certain family office format, and then, making co-investments with other family offices and etc. You can imagine we get pitched a lot. As a matter of fact, we get hundreds of pitches on a monthly basis. The ones that we spend time speaking to, we would like to say are the ones that empirically make the most sense to us, right? With the best numbers and the best, features and etc. But frankly, that's not what happens because we're all human beings at the end of the day. We're not, machines that just process information. That's what Investive is trying to do. More on that at some point. But as a human being, we respond well to stories. And that's the only thing that really captures our imagination. So, I always like to give the example that from the most primitive nations and the primitive cultures you can think of, even in history, cave paintings and hieroglyphs and Egyptian pyramids, it's all stories, right? They're not giving facts at you. They're not telling you, what the percentage of their, yield was, what the IRR was. That's what I tend to see in the private alts market. So most real estate managers, let's talk about real estate managers today, specifically Blake, for your purpose. We have a lot of following of real estate funds that are on my LinkedIn. They have an internal marketing team. Maybe they've hired 1 or 2 people. And, every 3 or 4 days, they'll put up a post and they'll say something along the lines of, this person is attending this conference here, some sort of a promotional event. Or they'll put up something along the lines of, our fund was just recognized for this, which is wonderful, but again, not that effective. Or they'll put up something like, this is the most recent, report that we've generated based on our exits in the last, 3 months. Those are all facts. And frankly, in my doom scrolling that I'm doing through LinkedIn, I'm not going to stop at any of that. I'm just going to say, oh, that's cool, that's cool, that's cool, and just move on. Where is the most value and where I stop scrolling is when I come across maybe some sort of a video form that I look at, and the first thing I look at is how long is that video. If it's 30 seconds and below, then I'll stop to actually see it. So that's criteria number 1, and then criteria number 2 is it telling a story? Did it start with a very impactful hook? Is it taking me through a beginning, middle, and end? Because our minds are so primitive, as much as we want to feel that we're sophisticated, that information as they come to us, we don't like to organize, or we do like to organize, but we don't know how to organize. And we're uncomfortable when we have to organize the information ourselves. But when the information is organized for us in a story fashion, beginning, middle, and end, right? Then suddenly we become very engaged and it becomes a pleasant experience for us to stick around and actually listen to. And that's the important part. And going back to what Ramesh was saying, when you recurringly do that, the storytelling and the presence and the staying front of mind, then, weeks or months down the line, when I receive a LinkedIn message inbox with a, templated marketing email that says, this is, good to connect with you. Here's what we do. Here's our deck. We receive hundreds of those. But the ones that we actually spend some time on are the ones that we remember, oh yeah, we've seen these guys' content on our LinkedIn over and over again. Okay, let's see what they're doing. So it all plays into a bigger picture. And I'm ashamed to admit that I also fall for that all the time.
Great. This is, what I love, Saad, your explanation about is your self-experience, your self-story.
Right.
And how was your user behavior? This is a user journey, basically. This is a user
Yeah.
which is going on all along.
Yeah.
Saad, which walk through how every user want to have that information. Now, everyone want things to be very fast, quick, and in the formalized way. The more comfortable you make them, more easy for them to adapt to that particular thing. The more you make it difficult, they don't want to go about it. It's all about that, It's all about
Yeah.
that.
Yeah,
Love.
one question on that, Saad, on the storytelling part.
Sure.
Are you referring to storytelling on your products which you are selling, or are you telling storytelling about experiences of other people not related to what you're trying to sell?
Both. The whole purpose of marketing, yourself and your product, it has to be recurring, right? And eventually, if you just talk about one topic, it becomes very repetitive. So what you should do is to mix it up. You can talk about others' experience of your product, others experiencing trying to achieve something similar, or you can talk about the product itself. But either way, It's always about the best storytelling.
Got it. Okay. And Ramesh,
Um,
this is for you. Sorry, go ahead, Asad. Sorry about that.
oh no, I think I finished my point.
Sure, Ramesh, and on with our, by the way, we do quite a bit of a 506B offering. There is a line to cross, right? How much we can talk about it for solicitation, what we cannot do. Where do we draw the line, where we still want to do social media, but not specifically talking about our own fund or product or offering, right?
Yes.
How do we manage that, So,
It's simple, it's a storytelling altogether in another way and educating. When it's come to the education, Raghu, you can do a lot of educating. You are not putting across any 506B deal out there. As long as you're educating people, on
okay.
that existing parameter, it doesn't make any big difference to anyone or any authority. So it's what you have to keep this with is all about educational at the first end. Whether it is,
I see.
406C, whether it is 506B, Raghu, it on top of the funnel, let me this is a marketing language again, when I say top of the funnel, bottom of the funnel, so it's when your top of the funnel has to be completely driven on the educational concept. Some
Okay.
funnel has to be direct marketing funnels, okay, but majority 60-70% of your funnel has to be educational piece on the top of the funnel. That's the freebie. And when you keep doing that, it doesn't make difference for you to whether it is 506C or 506B. Raghu.
Yeah. Ramesh,
Got it.
can I give you a visual aid for this?
Yeah, why not?
So we've been exploring doing fund marketing for fund managers because marketing is not something that most agencies can do when it comes to this particular industry.
Yeah.
And as I spend time looking at the different managers that are now trying to do advertising on social media, if I come across an ad, what I tend to do now is I tend to take a screenshot and
Okay.
I try to save them in my drive. So I've got a bunch of these screenshots.
Okay, why don't you show me any one of that?
I'm going to show you two, and the two very distinct ones, and this is how you navigate the 506B and C type of clauses. So the first one is from a company called Centera Group. Okay, I don't know if you can see it.
Yeah, I saw that.
It's just
15% fixed returns. Okay.
right. Okay, so this is an example of facts being thrown at you.
Yeah.
15% returns. Why do I care what your return profile is, right? Let's keep it moving. That's just the way that I am. But the
Yeah.
next one that I found is a company called Equiton.
Equiton.
Equiton, and
Okay.
I'm going to give Equiton a plug here because Equiton is based out of Toronto, where I am. I've met them in many family office conferences, and I've met the founders. Look, they've raised 900 million plus in just doing digital marketing. They don't do anything, really outside of that. Equiton's ad is the following. I don't know if my thing is backwards, but it basically says,
Yeah.
it's just as it's this big picture of a building. It just says, be the owner of a building without the hassle of being a landlord.
Lovely.
Right.
Yeah.
There's no performance metrics. There's no nothing. It just says be the owner of this building without the hassle of being a landlord.
Yeah.
That's an example of a story because
Yeah.
it automatically then puts into your mind, oh yeah, if let's just say I own 3 properties, the hassle of being a landlord and the rights of the tenants and etc. That in itself is a huge pain in the ass.
Absolutely.
Right. So,
Yeah.
that's a perfect example of how to do it.
Lovely. I'll add on to that, so how we done that, that's a problem and solution statement. Okay. So what the pain is being, nobody wanted to be landlord because landlord has to do tenant management, cleaning, maintenance, property management, all those kind of a thing. People are investors are investing because they want a passive income. They want a free
Right.
life altogether. They don't want to get into this daily routine where they got another job. Let me get a tenant for my building or my apartment. They don't want to do that. They have identified that's the problem. Now
Mhm.
they're portraying that problem and solution they have, right?
Yeah.
That's a problem in statement solution. That's the kind of a content ideas people have to come up with and go forward with that. So I must say, very good example. We are on the same path for that. So love you.
Yeah, yeah. I started doing this because I started seeing bad advertisements. So I started taking screenshots of bad advertisements, and I started saying it to my COO and saying, "Hey, look at this. This is a terrible example."
So
And then
now,
I came across some good ones because of the algorithm started, trapping me now. So now I
lovely.
start seeing the good ones too. So,
Yeah,
there's good and bad out there, right? Messaging is important.
yeah,
As Ramesh pointed out, the problem and the solution. At the end of the day, everything is a sales process, right? Everything that we do in life, we're selling to somebody for something, whether we're selling ourselves, whether we're selling our ideas or selling our work. But the way you sell and the way you put that information forward is very important. And it requires a story format, it requires a plan, and it requires a progression, right? So that's the next component of what needs to be addressed, which is sure, you start with a story. But that story needs to progress because the next story needs to take you from the point that the previous story left you on from. One of the things that we started doing in our company, and this is a little different because this is more tech, but Investive builds technology for capital raising and capital allocations for family offices. Now, part of our marketing with Ramesh's team is we created these rules, right? And we said these are the 40, or let's just say 20, 24 rules of capital raising. And every so often, every week or so, we start putting up these rules as part of our social media. It has a big post that says, here's the rule. The next sort of picture in the accordion is an explanation of the rule. And the caption really tells a story of what exactly that rule means. And it gives an example of something. So one of the examples I give is I forgot what rule number it is, but the rule is don't tell an investor to turn to page 33, right?
yeah,
And it's a very sort of interesting way of saying don't make your presentation the entire conversation, because a lot of people do that. I've been pitched many, many times, or I've sat through presentations many, many times where it starts with a presentation and it continues in the presentation, and every time somebody asks you a question, the response is, okay, well, if you turn to page 33, you're going to find that X, Y, and Z. Now, you can turn to page 33 as you're explaining, but you don't have to say turn to page 33. What you need to do actually is to, again, respond in a way that's engaging, respond in a way that is relatable to the person that's listening in the audience, and use your visual cues as you need to. But the point I'm bringing up is that our rules, the 24 rules, are related to one another and they are in progression. It almost feels like a saga format. And for that reason, people get engaged because people look at rule number 4 and say, wait a minute, this is rule number 4 and this is interesting. I should probably go back and figure out what rule number 1, 2, 3 was. Right. So that episodic methodology also is very useful.
absolutely. I think that makes sense, and that's the story game, as you said, story number 1 left you at a beginning of a story 2. If you look around the way Netflix series comes up across now, series 1, series 2, series 3, series 4, and then again a curiosity that what is there on a second, on third, and you keep watching, you keep watching, you keep watching. So that's the exact example. Saab, we are talking over here. So why don't you explain on particularly I'll say Saab, what kind of a challenges you have so far faced with your marketing probably, and how did you come over on those, or did you yeah? Can you talk a bit on that?
So on the tech side of things, marketing is crucial. And you have to have a unique approach to marketing because every tech company is marketing their products. For us, we already know our audience. We know exactly who our audience is. It's people like us, right? So my family office has a very specific interest in the work that I've done with them in the past. I've learned that there are some key pain points.
Okay.
So all of the posts that I put up and all of the content that Alicia gives you, for example, and gives your team, it's all related to those questions and those pain points. So you start with the problem. Then you also have to figure out what the scope of the problem is, right? How big is the problem? How crucial is it to a person's day to day? Because the language that you use also matters. You can identify a problem and you can talk about the problem. But again, you have to take an emotional angle to it. I can tell you that, capital raising is expensive. Yeah, you know that,
Very
right?
true. Everybody knows that, sir. Everybody knows that. Yeah.
But what I can tell you is if I say capital raising is frustrating, that's a different cue that we're giving. Frustrating pulls at your emotional strings versus capital raising is expensive pulls at your logical strings.
Yep.
And I don't think I need to, in 2024, tell you that one is more powerful than the other.
Yeah, that's true. That's true. Yeah, and that's very true. Cool. I think that's the messaging or probably the way you said, uh, you have persona defined, who is your targeted audiences look like. We creating a content toward the pain and a problem statement, get them hook along. So if you specifically talk about your industry and their pain point, you're getting them into your funnel. It's very obvious. That's the
Yeah.
yeah.
Well, we've got some managers in the group, so I'll say this. Here's a pitch that I got, which we're still in the process of looking at that deal, but automatically it captured my attention. Here's what they said. They said, look, family offices, they're often disorganized. And, they're doing most of their business off of Excel sheets, and there's a lot of manual work involved. To a point that, look, we've got an investment vehicle, we have a fund that we want to talk to you about. But I would rather spend less time talking about the fund and more time telling you that we've spent all the time and money and effort to automate and to digitize most of our fund's operations so that we can give you digitized versions of our reporting and help you manage the investment if you do make it, so that we can make your life easier and less expensive after the investment. When they said that to me, I automatically thought, okay, well, this person clearly understands the dynamic of what happens inside a family office, right? Making the decision to invest is just step one.
Yep.
The next 3 to 5 years that I'm married to you, I have to sit here and get reports from you.
Yep.
Every time you give me a report, I need to now sit there, engage members of my team to actually plug in that data that's coming from a PDF into our accounting system somewhere.
Yeah.
All of those things need to happen, and there's a cost. There's a very real cost that's of money and in time that we have to address after making an investment. And every investor or every manager that I speak with, they always say this is why you should invest because we are X, Y, and Z. This is the first time a manager came to me and said, you should invest because we will make your life easy after you make the investment. Because let's face it, most funds, your returns are very similar to your competitors, right? If your strategy is the same, then chances are your returns profile will be hovering in the same area. Because unless you're absolutely terrible at maybe, I don't know, managing a development or something like that, then everyone's doing the same thing. What separates you is your ability to engage by understanding the pain points of your audience.
Very well said, sir. That's a very good point to differentiate probably, sir. Differentiation is the biggest factor which is needed in order to capture that investor to your list precisely and to get him to talk to you. If you don't have a different factor, out there in your content, in your messaging, in your brand, on your website, on your social media, he's not never going to talk to you. So,
Let's try an exercise. We've got a small room here, so I think this will be actually good.
yep.
Can we hear, or in the chat maybe, some people tell us what they believe the pain points of their investors are related to their product? If you want to put it in the chat, or if you want to just unmute and actually just tell us. I'm
Yes.
curious to hear what people think their customers' pain points are.
Anyone knows the pain point of the investors? Basically, that's the question.
Okay, so Raghu said they think it's guaranteed returns.
That's the pain
So
point.
so let's define that a little bit. What do you mean, Raghu?
Saad, but I think, they think it's a guaranteed return. So it's not the pain point of an investor, basically. Okay. This is
It's
a
the pain
pain
point
point
of the
of
manager.
there is a pain point of the client itself. Okay, they think
Yeah,
like,
Raghu, that's your pain point. That's not the investor's pain point.
No, let me explain what I meant. We have been paying quarterly distribution for 2
Yeah.
years. And then because of the cash flow, we said we are going to put a hold on it for the next 8 months, sorry, next 8 quarters till things improve. Or they say, oh, you said you're going to guarantee every quarter returns. Now I keep getting calls every other day. Oh, why I've not gotten distribution? No, I thought it is guaranteed. I know they understand all this, but still, when they don't get something, they think that we are not doing it right. No, oh, you said
Yeah.
you will give me. I know it's projected and all that. They inherently know, but when it comes to when the profits are there, they think we are all together. When there is a trouble, they think you are different, I am different. No,
Yes.
it's like they start to demand things. It's kind of becoming a pain point, even though we explain. And then suddenly they say after 2 years, oh, now I want to take my money out. What's the process for withdrawal? And I've been hearing almost like 20% of our investors every second day. I keep having these calls. It's a
So
pain
there's
point.
a
Yeah. We did set all the right expectation. There is no guarantee stuff and all that. But I don't know. People seem to kind of understand, but again, not accept. No, right?
understanding and accepting are two different things, right? So
Mm.
remember, they have all the documents that they signed. They can go back and read everything that they signed. But do they do that? No, right? I've never gone back and read a document unless I've had a problem with a manager that required me to then figure out if I have some recourse in my action. Now, the point that you're making, which is that when things are good, they're happy, and when things are not, then they start to forget the fact that this is more about a partnership towards an investment where both make money. And an investment inherently has risks. Look, we're entering into a new market where real estate specifically has gone through some challenges, right? Especially in the last year, especially the cost of development. The cost of development and the cost of materials have gone up to such a degree that the returns on the properties are actually quite low. And it's only the best developers that are still making money in this industry, where others, here in Toronto, for example, we're in one of the worst housing bubbles in the world. What's happening is that multi-billion-dollar real estate managers who've got AUM of 10, 12 billion dollars, they're still raising money because they have to raise money, but they're not developing anymore. They're just buying land and just holding for when things get better. Now, I'm saying all of this because investors are well aware that the conditions of the market right now are not perfect. And real estate sometimes will go through its ups and downs, just like with any other industry. But then they look around at everybody else, because you have to put yourself in their shoes, remember. So if they look around, they're looking at news like Blackstone's private REIT is stopping withdrawals, and other places are stopping withdrawals, even though they were meant to be liquid products. What that tells them is that these companies and these funds are struggling to keep the money in, because the sentiment of investors is to take the money and hold it in cash. Right now, family offices and wealth managers are holding the largest amount of cash on their portfolio than ever before. It's somewhere between 20 to 30% in cash, which is unheard of. And it's only because their hesitation for the markets. So they're looking at all this news, they're looking at all this information, and the slightest hiccup on your side, they're now looking at signals and saying, wait a minute, I'm seeing all this adverse news over here, and then suddenly Orion stopped distributions. Maybe I should pull out my money before it goes worse. Because they're just looking at that signal, and it maybe have nothing to do with what you did, but everything else that's happening in the market. So then the question is, how do you combat that? Going back to what Ramesh said, it's all about the content that you provide. They're getting all this news flow in other parts of their social medias and etc. in the news that everybody else is having trouble. So they're looking for trouble in you. So instead, what you should be doing is not reactively, but proactively putting out good news flow that addresses that very specific criteria. Sometimes it's good to just address the elephant in the room, right? Start your messaging with, we know that the market is tough, but here's an example of what we did for one of our investors or with one of our projects or with one of our properties that allowed us to safeguard our investors' money. Again, it's a story, right? We know it's tough. This property is struggling. However, this is what we did a week ago that allowed us to come out of that situation. You have to proactively give that story out, whether it's through an email campaign to your LPs, whether it's in your social media, that can constantly combat all the other negative news that they're getting elsewhere. And that's how you address that pain point.
Yes, thanks, Saad. I think we believe we are on the right track. We did send out very detailed data points, what we are doing differently for all the risk mitigation, whatever is going on, and also we by the way, Ramesh, I don't know whether I told you or not. In Dallas, by the way, I'm from Dallas, Texas. We have a studio set up where like a CNN when they do news broadcast and all that, where we can rent a place and then go and we do something like a live broadcast where all of our founders, we go there and we have an interactive session. We also bring in some of our partners, like the partners whom we deal with, industry experts, and then they give their opinion, and then we talk about it, and then it's a live broadcast. People have liked that kind of a communication from us than an email where we see face to face and then do like a live panel discussion. And it's not that expensive. We just pay like $500-600 to rent the room, and they have the complete setup. And it's not a webinar, but it's more of an interactive panel discussion where we explain some of these things. I think that has worked well in the past, but now we have one more coming up in the next 2 weeks where we are going to address the specific issue. So thanks for your inputs on that. So
I think that's great. If you have that will termed, Saad, very precisely investor relationship management. Do you have an investor relationship person in a place, and how frequently you do it, how you do it, and what all action you take it in order to maintain that relationship with your investors. So are you sending some gift goodies to them on a particular event? Are you making a calls to them and asking, hey, how you doing this days? This is what we have performed. It's a friendly call. It never need to be a newsletter kind of a thing, or a friendly call, a gesture. Always give a confidence to that particular investor that, okay, yes, they're here, and giving that confidence, Raghu, change the entire ball game. So whatever you're doing right now, you're calling all of them in one meetup place and having that conversation, really lovely. That really makes sense. And along with that, if you probably try to build out an investor relationship who is really making a call to them, understanding what they're doing, how they're doing, so that could really help out down the line. The one particular problem which you're facing as well, it would reduce down. Secondly, whenever you have an upcoming investment, these guys would be the first one who would interested to invest along with you.
Mhm.
sure.
This
Totally
pro-
agree, Ramesh. I think, I play that role, I manage investor relations. I definitely call whenever there is a trouble email, we don't just respond by saying that this is how it is. No, we always talk to them. But generally, that's some trend we are seeing as one of our pain. It's not a pain point. It's just a investor, like Saad said, they are getting panicky with what's going out. And there are some funds which are closing down and going bankrupt. And we have seen some of that in Texas area. It's making them even more panicking. No?
Yes.
So,
Good news is that Texas is a good place to be for real estate right now. So
yes.
Exactly.
We do have
that's,
phenomenal properties, which is doing well, except banks are asking us to put more money in the reserve. We are not able to make those cash flow stuff. But other than that, valuation and occupancy, they're all holding up very well. No? So
I think, that's cool. Why don't we have a question from Eric or Laser if they have something to ask? We would love to answer them, probably. Saad, anything from Laser or Eric? You can unmute, guys, and you can ask if anything you have. We would love to answer. They just on mute, probably. Yes, sir. Go on. I think we can carry forward, sir. Anything else we
sure.
want to discuss? We can, or we can conclude on it. We can define on that particular thing.
So, going back to the concept of marketing, I'm curious as to what you think about the way analytics are being used, right? So how do you track analytics? What types of analytics do you track? And how do analytics make you better at making decisions?
Obvious. I think, being, Sad, you being a technical person, you ask really a great question, I must say. A lot of people don't understand this analytics, tracking parameters, you know, unique tracking parameters and all those kind of a thing. So there are multiple tools out there where, you actually, you can track an entire user journey from what exactly the first content that user have actually watched and how many times that particular user have specifically visited your website, how much time spent across, how he went through your entire website altogether, Rick. So all this can be tracked and can be captured into tools. So GA4, Google Analytics 4 is the one tool. Then you have Hotjar is another tool which you can exactly capture entire user journey. You can say how users are tracking across. And apart from that, 4 to 5 different paid tools. With those 4 to 5 different paid tools, you can entirely know that okay, how much you spent across on this particular user, how much you spent across on organic parameters, on paid advertisement, and how much was the cost to acquire this particular one lead into your system as well. Basically, those tools being utilized on e-commerce where you wanted to entirely track the journey of a user, from that term as first attribution, second attribution, conversion attribution, kind of a thing. So altogether. So I would not name all of the others tools which are out there, but yes, you can go for Mixpanel, you can go for GA4, you can go for Hotjar, you can go for I think one more is that which I just forgot.
Microsoft Clarity has the same features as the Hotjar one as well.
Exactly. Clarity is the one. And then, you could track with these tools the entire journey. You can create the audience. That audience can be built out with that. So Meta has a pixel, that pixel can be trained across, and then that pixel can be utilized for retargeting as well. So those factors are there precisely. So those can be utilized moving forward. And as right now, the way generative AI is creating impact. Soon we're gonna implement a couple of new tools for tracking parameters where we can see and target those. We can create a different audience and target them across Saad into that.
So one of the things that I'm interested in is how you make decisions based on the analytics you do receive. So I don't know, let's take an email campaign, for example. Everybody does email campaigns, right? The basic KPIs that people are measuring is open rate, click rate, bounce rate, and
Unsubscribe,
conversion, right?
unsubscribe, click through.
So
Yeah.
So the question is, how do you use those metrics and what kind of adjustments do you make? Now, I mean, I've got my thought process in it, but I'm curious as to how an agency looks at that.
Absolutely. I think, see, if we talk about email, 1000%, again, there is a two part of it to that email. One is like, where you have a cold list and you do the cold email blast. One,
Yeah.
you have collected the emails and you like, regularly send across newsletter, informational email kind of a thing. So I'll just keep cold email list aside because that is a whole together a different ballgame. Let's talk about the email list which you have opt-in on your website. So obviously open rate is the biggest parameter because until unless you don't have open email, that email doesn't make any sense. So what is your open rate look like? First factor. Second factor, what is your click-through rate on that? Once anybody opened that, what was your click-through rate? Those are the two biggest factors when, when we look at an email campaign is running across these two factors. Then what was the subscribe rate to that? How many are
Right.
from that email list? How many is unbounce? How many bounce you got out of it? Because let's say you are collecting emails, those are good emails, and if you're getting a bounce out of it, there's something wrong with that. So 4 parameters: open rate, click-through rate, unsubscribe, bounce rate. These are the 4 parameters which we on top, when we run across a several email marketing campaign under the current database, those 4 factors we really uh, keep looking at a bigger number.
Mhm.
So
So we started doing some internal email campaigns ourselves. And for me, I mean, so my background before, the family office stuff was actually in managing sales teams
okay.
for actually some pretty significant managers. So I came in as an outsourced consultant, and one of the things I always told people is always look at your analytics because it tells you where you're going wrong. So here's the way that I look at it. When I send an email campaign, there are the measurements that we're tracking is open rate, we're tracking click-through rate, we're clicking and we're tracking a response rate, right? There are other important metrics, but those are the ones that are the most important to me because it tells me where I'm going wrong. So if my open rate is not high, that means that something about my deliverability or my domain score or all of those things is not getting me to the inbox. It's getting me to their junk email, right? So it tells me that I have to make those changes. I have to maybe set up DKIM and maybe I have to set up DMARC and all of those things. The other thing that it can be is that your subject line is not very attractive. Right? If your emails are not being opened, it generally means that it's not in the inbox. And if it is in the inbox, then you haven't created a good enough subject line that people are interested in opening. Now, let's just say your open rate is 60%. Well, of that 60%, the next thing that we track is the click-through rate. And then that question is, well, sure, somebody opened your email, but maybe you get 100 emails a day. You just open it, you take a quick glance, and then you move on to the next email. A click-through rate tells us, has someone actually taken the time to actually read what's in your email? And so if you have a low click-through rate, then that tells me that the copy of your email needs work. Right? It's not that your subject line is bad, it's the copy of your email is bad.
Very true.
So you can make tweaks to your copy and adjust for your next sequence by knowing what your open rate and your click rate is. And then your response rate or your ultimate conversion, let's call it, is now a measure of how compelling is your offer, right? Because if they hit response with a positive, then yes, then they're interested in what they've read. Or if there's a CTA in there where they have to join something or where they have to fill out a form, you're measuring that because it tells you now that yes, your subject line was good, yes, your copy was good, but ultimately the offer that you're giving them is attractive enough to them for them to show some interest. And that's what I was getting at is a lot of people don't take the time to make these adjustments because you're not going to get it right the first time, right? The first time you send an email, you write an email and you think this is, a perfectly well-crafted email, but keep in mind there's lots of different personalities that read emails. I'll give you an example. We're doing a co-hosted event with Project Red in May 15th here in Toronto. So we sent out an email campaign to our base of investors and we said, hey guys, Project Red is a global charity. It's anchored by the Bill and Melinda Gates Foundation, who will be in attendance. It was started by Bobby Shriver, who is a Kennedy family member and part of the Kennedy family office. And the whole charity was started by Bono from YouTube. And so the members who will be in attendance in this event are, the Clinton Foundation and et cetera. So I was giving, like a list of who was attending: Bank of America, Salesforce, CEO, et cetera.
Mhm.
We got a lot of positive responses, but we also got a lot of negative responses. Now, I thought the email that I crafted was a great email. It was an amazing email. I thought it was wonderful.
Mhm.
I didn't think for a second that there was a political angle to this because we got a bunch of responses. And this is, whether you agree with it or disagree with it politically, I think that it's very true that there are people who are going to look at this and they're going to say, I don't want to be in the room with these people. Maybe they don't want to be in the room with the Clinton Foundation because they differ from them politically,
Mhm.
right? Maybe they don't want to be in the room with the Bill and Melinda Gates Foundation because they differ from them politically. So the responses you get and the feedback you get is always going to be different because it's coming from different shoes than the shoes of your own mind, which you think is going to be this perfect explanation. So you have to be able to adjust. So we then went and adjusted and removed the Clinton name from our email campaigns, and everything in the responsivity, everything just shot through the roof. So we realized that slight removal of the Clinton Foundation from the list of attendees just got us a huge bump in those that are interested. So, you have to be able to pay attention to those things.
Yes, lovely. So, Saad, that being very well said, I must say that, that attention to detail is the win, or like, attention to detail is the only way of a winning or success, basically. So if, as you said, like, open rate, click-through rate, and if the response rate is not there, okay, your offer was missing, or that was not that compelling that user have took the action. Another thing to it, as you said, there are several different buyer personas out there. That one offer quite might be compelling for that one particular audience, not be compelling for the other 4, 5, 6 different personas. So you really need to create a different variations for different audience, segment those list into your email, specifically in email marketing tool. So segmentation is another factor. When you do the emailing, you create a list under your CRM. You really need to segment them. So that's the factor of a tag where that one particular lead is came from, whether it is for an investor form, whether it is for lead magnet, newsletter, or like, from social media, particular ad kind of a thing. So you segment them, you create a different list, and then you create a content for that particular list to take that particular action. So that for which particular persona, for what kind of a content you are creating, what is the subject line look like for that particular persona? Okay, what is the offer could be compiling for that persona? And obviously that's how, like, you get to the different level. So you segmented list, you segmented your persona, you created a content for them, and you're hitting them across. So you're not playing a plain ball game. You know whom you're targeting, you know what offer they like it, and then you're going after that. That's how it has to be. Sar. Lovely, Sar.
Yeah, yeah. Um, and I see that Blake is back. I'm curious, Blake, if you have access to your audio, what do you think about the marketers in your space, like in real estate? Do you think that managers are doing a good enough job of marketing, or is it just that they're starting to understand what marketing actually is?
That's a great question. I've been impressed at some of the directions that sponsors have been taking lately. Of course, there are some that are lame, to put it mildly. But I think they're going in a decent direction. I usually take a look at each and every one that comes across my, ads, just to see what the industry is doing and what's available, what's offered.
Did you were you here for the portion when we were pulling up the ads, the example of ads that we see?
No, my internet connection was terrible, so I had to restart my computer and
That's okay. So we were actually just doing that because we were I was explaining how I come across these ads now, and I started taking screenshots of these ads, and there's very clear differences in how they're going about doing ads. But what's encouraging to me is that the managers and sponsors are now starting to do ads, because it's never used to be the case. Um, this industry is very archaic. I find that in the public markets, everything is tech savvy, everything is recorded online, and everything is done digitally. Whereas in the private markets, everything is done manually, to, from your subscription process all the way to, the reporting, all the way from the data rooms that you send to even the investor onboarding. So I'm always encouraged to see that people are now making that shift to digital marketing. It is a very, very wide open expanse when it comes to our industry, and there's a lot to learn. So I'm curious as to where managers go in terms of doing the marketing, whether it's going to go all the way to the direction of where tech founders and tech companies are doing it, or maybe a hybrid of, attending the conferences and the trade shows and et cetera that they normally do, with a mix of or a layer of digital marketing that they do on top of that.
I agree. And good on you for noticing those key differentials in the private equity markets. That's one
Yes.
thing that I'm putting together my fifth fund now. And I am taking my time to do a lot of research and to blow everything out of the water and to capitalize on as much technology as possible. It's really easier on the sponsors to
Yeah.
bring on technology.
Do you want to hear about something really cool that we're working on?
Yes.
So, coupled with Ramesh's team, so Ramesh's team does the marketing for my company, and coupled with his team and another group out of Toronto, we started building essentially and training a private markets AI. Now, I'm sure you've seen some of these examples online where they have this AI cold caller that you can use as an outsourced salesperson. Have you seen those around?
Yes.
So there's a company like that in Toronto, which, was going that same route. And we ended up acquiring that company. And we said to them, look, there's plenty of competitors out there who are doing what you're doing. So let's move you away from that and focus you in on a very specific niche industry that's huge, which is the private alts. And in the private alts, the managers are the customers, and they're going to be the ones who are looking to engage investors. Problem is, you can't do outbound outreach to investors using AI because it's just not going to play very well. But there is an application for it. So, and what we're doing is we've trained it to understand all things related to private markets, real estate, venture, all these different asset classes. It can understand deals. It can pull data related to deals from data rooms and etc. and essentially book meetings for you. So what we're building is a whole digital marketing top funnel. And then once it captures a lead, we got this AI caller that can actually directly call that person, automatically ask it some questionnaires and questions, and maybe answer questions for them to bring them to a point of qualification. Are they accredited? Are they, suitable for your product before they get into a call with the manager themselves? And it really is cool because it scales that process outwards. So what you're going to start to see in the next maybe year or so is a process of lead generation when it comes to investors, where managers are employing digital marketing to, whether it's social and ads and etc., to just capture initial interest. But then they're not the ones that have to go follow up with that lead anymore. Now it's going to be AI that calls them and says, hey, you filled out this form. So that we call our AI Iris. So I'm Iris, and I just want to ask you a few questions, make sure that you're qualified for this product, et cetera, et cetera. And then once they distill that person down, it's like, okay, well, I've asked you all the questions I have. Do you have any questions for me? And it's knowledgeable enough to answer the questions about the product. And then the ultimate goal is to book them in for a call with the manager. And it updates the manager's CRM. It updates, the manager with an email and tells them, okay, this is what's happening. And it uses Calendly to actually book in a call directly into the person. So managers wake up and they say, okay, my IR team has, 5 different calls scheduled this morning because some AI somewhere just did that for me. So that's where the industry is headed. And I'm not sure if this is going to be, where it stops, or if it just compounds into even more technical and scalable activities.
Well, even though Moore's law seems to be broken, it's still a good basis for what technology does.
Yeah.
My question for that technology that you're speaking of, sounds great, by the way, is what is the reception from the client, knowing that they're talking to an AI and not a person?
So there's a trick to it. Everybody who builds AI as an AI cold caller, they try to mimic a human voice, and they try to pass off that call as a human that's talking. That comes across as a disingenuous, and then people don't respond very well. The alternative is, because Investive is we market ourselves as very much an AI company. So we've given it, as we're training it, we've given it the script, and we lean into the fact that it's AI. We don't start with, hi, I'm Iris and blah, 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 blah. We start with, hi, I'm Iris. If you've got 30 seconds, you're about to have the most interesting conversations you've had in the last year, because I'm completely an AI and you're talking to an AI.
Great.
So you immediately set the frame ahead of time, and you've taken away the level of disingenuity that comes with, an AI cold caller.
You're being upfront.
Being upfront.
I think,
And so,
Saad, I'll add to it. We have implemented similar thing to it, but what we have done to that, Saad, is we humanize that voice with, let's say, for example, right now, Black, Saad voice, we mimic the Saad voice to that AI. So it exactly go as like, what Saad voice look like. And that is when, like, you have already talked with the Saad, and Saad gonna hit across a call to you on that investor note. It never feel like, you're talking with a AI. It's a humanized voice, which is, so you, at the first stage, we train that AI in a humanized voice with one particular team member from your team size, take that voice over and reach out to that particular investors. And this whole process is a term as discovery call, investor discovery call. So once you've done this investor discovery call, and then, one particular thing which Saad said, Once you have those all questions answered and pre-qualified investor defined, then further steps being taken forward from your team side.
Yeah.
Yes.
That's what most people do when it comes to these callers. They try to humanize it and etc., which is good. I'm not a huge supporter of the mimicking of the voice because, again, people want to know if they're speaking to a real person or if they're speaking to an AI. So you'll find sometimes that when you do that, maybe halfway through the conversation, there's some indication that this may not be a real person. Because AI is still developing, right? So there are moments of weakness that it has. But when that happens, it has the ability to really derail your conversation because suddenly the trust is now gone, right? So more and more we're seeing that it's better to say from the very beginning, hey, this is AI. And then you can take the steps to humanize the voice and you can say, yeah, well, sure, it's AI, but it's still disconcerting to be able to talk to a machine. So then how do you humanize that voice further? By adding filler words like and like and so it actually does that now. It has intonations and the way that the voice reflects and all of those things. And it's amazing to see how the technology is going. But Blake, you raised a good point, which is the adoption, right? And the reception. Because if you're in Fund 5, you're probably now reaching out to the wealth managers and the family offices and maybe even institutions at this point. Those guys are a little harder to be able to engage using things like AI. They really do require the relationship aspect of things. But if you're in Fund 1, Fund 2, or maybe doing direct deals, and you're reaching out to individuals that are accredited, let's just call them doctors and lawyers of the world, they're okay with talking to AI because frankly, they just want to save time, right? They want to get the information as quickly as they can. They're
Agreed.
not as sophisticated. So, there's an audience segmentation, as Ramesh mentioned, that is very true.
Cool. I think that's answered Blake's question probably, Saad.
Yeah.
Cool.
How are we doing on time, Ramesh?
I think we are finished. We are over a time. Probably we are over than 20 minutes altogether, Saad. So we can conclude on this, Saad, altogether. I must say thanks a lot for all of them to joining us on this today's webinar. And thanks a lot, Saad. It was really interactive and engaging and value driven. So we can conclude on this, Saad.
Yeah, and anybody who's here, please feel free to add me on LinkedIn. And if you want to connect, just let me know.
Cool.
Sad, I want to thank you, and your voice is very mesmerizing. No? Feels like keep you want to keep listening to like a podcast. It's very, very engaging. I like
That's
it.
a very nice compliment. I appreciate it. Thank you.
Cool. Thanks a lot. Thanks a lot, guys. Bye-bye.
Bye, everyone.